This is the seasonal stock and ETF report for today, October 13th. We're going to talk about possible stock market crash. I don't know if the market's going to crash, but we can sure look at the history and seasonality and see what information we can get from it. Let's go to trade seasonals. We go to indices common, GSPC, which really is SPX. We're going to take a look at that. We're going to select all of our data, which is 94 years. There. This is a S&P 500 94-year seasonal chart, which means it had averaged the trend of each of the years and consolidated, and we're looking for trends, not numbers. So let's first take a look right over here, or let's just select the month of September, which is about that. Take a look at September. September has been a bearish month. 53% of the time it has lost in the last 94 years. But you see there's a wiggle up. Let's just take the downside there. And stop it right there. So this is based on, make it 23. There. This is the opportunity window I'm looking at. And what is this? This is September 5 closing price to September 27 closing price. In the last 94 years, this date range has been losing 57% of the time with an average of 3.97%. See, this is 1929, 1930, and so on. So this is showing what has been lost each of the years. In 2008, that September, the loss was almost 11%. In 1987 was actually a winner. 1987, this date range actually had a gain, interestingly, and then the market started dropping pretty sharply. In 2008, this dropped almost 11%. This year, the market dropped 7.1% during this portion of September, September 5th to 27th. But where are we now? We are in October. We'll switch this to October 13, which is where we are right now. And we are looking at, let's just look at the next 7 days. In the next 7 days, it's been bullish for the last 94 years with an average profit of 1.65%. Made money 59% of the time. And as you see, there's a slight uptrend. But what's interesting is this down. Do you see that? This tiny little down? Let's find out more about this tiny little down. Talked about this yesterday also. It's a 7-day period, 1020 until 1026. See this? Last 94 years, this date range has lost money 61% of the time and the average of 2.18%. 2008 was 13.85%. 97 was 8.23. No, 87 was 3.87. 97 was 8.23. 2020 dropped 1.22%. Last year was a winner, and 2019 was a winner. If we click any of these, by the way, you get that historical stock chart that you can price chart, and you can actually see what it looked like that year. But what is so interesting is this. The biggest winner was 17.99% in 1929. Then this. You would have made money if you shorted this for the last 94 years. Cumulatively, you would have made 100% in 7 days. So, we actually think this date range, it's very vulnerable. But also, if we look at the entire month of October, for the last 94 years, although it says this was bullish, it made money 61% of the time, but some of the biggest drops occurred during the month of October. As you can see, you can click any area, you can go to trade seasonals, click any of these and actually see the trade for that particular year. Anyways, my whole point is from today until this date right there, October 27th, don't go long. If there's going to be a crash, chances are it's going to happen before this date, because then the market turns seasonally bullish. As long as the fundamentals are right, seasonally bullish starting the 26th of October, and it goes all the way to January 6th. It's going to be a very solid seasonal uptrend as long as the fundamentals are holding. We'll be talking about that later. Right now, let's just worry about this period. Next 2 weeks, the markets are very vulnerable. That's all I wanted to say today.